Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, March 7th, 2017. This is the second of a two-part series on the marijuana stocks, the cannabis sector. In the previous video, I talked about, I spent a good deal of time, about a third of the video probably, talking on trading strategies and tips, in my overall view on the cannabis sector. That being that the current trend is down after a huge run-up. These stocks, as a whole, again, speaking generically for the whole group on my watch list of, I don't know, 30 something stocks, maybe actually 37. I'm looking at the watch list. Majority of those are in a downtrend, but more so profit taking, and still longer term, they're still way off their lows, almost all of these stocks. I ended the last video here with CNBX, the previous video, I should say. In that one, you can see from the lows back, a little over a year ago, that stock has run up 30 over 32,000%. Yeah, that's 32,000, not 3,200%. So it just kind of puts into perspective how big the move is. And again, the point I was trying to impress is that it's only healthy. Nothing goes up forever, and a lot of these stocks maybe got a little ahead of themselves in the near term, longer term. Now, longer term, I'm talking looking out years. I still think there's tremendous potential in the sector, and there'll be some winners and losers. So again, reference that first video, and you'll get some trading tips and strategies as how I prefer to trade the sector. One final note on that that I didn't mention last time is I'm spending the bulk of this video, almost all of it, in the previous video going over the charts, which is technical analysis. By all means, do your own due diligence. There's no rush here right now. The sector doesn't seem to be exploding. It seems to be in profit-taking mode, digesting the gains from the last run-up. So this gives you time to do your own due diligence, meaning do your research. With that being said, be very careful and selective on your research. What I mean by that is pay attention to the sources of the news when you're reading an article. Number one, realize that anything that you read, that you come across and you read or hear on TV or in the papers, it's already public information. That information has most likely been reflected into the stock, and very likely fully reflected into the stock by the time you read or hear about it. So that's number one. I often get people making a case for a stock, why it's a buy, and I turn around and look at the stock's gone up 300% since that news was first made public. And even then you can see the move before it's even public most of the time, because that's the insiders. They're telling the little birdies, their friends, family, whoever, yes, that stuff goes on all the time. They only catch a handful of people doing it. And of course you have legal insider buying as well, which are insiders in the company, major shareholders, directors, executives of the company that can buy the company stock. And so therefore, again, be a little skeptical. Know your company, know the background, know the fundamental story, because some of these companies, especially these very low priced, sub 1 cent stocks, even the penny stocks, have a tremendous amount of risk and may not have good business models. And then finally, like I said, pay attention to your news source, because this is the realm of the scamsters. This is where the pumper and dumpers live. There's nobody out there short of maybe a Goldman Sachs, and even then, or a big Bank America, that can pump and dump something like Apple. It's just too big. With a multi-billion-dollar market cap, you can't move the stock, and you can't come out with false information that's not going to be, immediately refuted by the mainstream media. That's not the story with these little pump and dump stocks. So, be careful, because a lot of the articles, when you look at the news source, you've never heard of it. Now, if you see the article coming from Bloomberg, Reuters, Wall Street Journal, that's a little bit more reputable. So I just wanted to, have you factor that in mind. As in other words, do your due diligence, but be very skeptical of what you read and hear on these stocks, and try to verify your source. And try to, if that news is legit, it should be. You can even go to the company's website, and if you're unsure, and they usually have public relations or press release section on somewhere on the website. All right, let's go ahead and finish up with the charts, and I'll wrap this up. Next one up is EAPH, Easton Pharmaceuticals. Similar story with a lot of these. This is a very clear, beautiful bearish rising wedge pattern. By beautiful, I mean look at how well defined that uptrend line is, all the number of reactions there, and how clear the divergences were. You had a buying climax here. You can see at the highs this huge volume surge. That's what we refer to as a buying climax often. So this one may have more to go. But as I said, if this sector is the real deal, and there's certainly potential, I believe in this sector fundamentally, it's possible these dips get bought up at the earlier targets. So you have each of these horizontal lines that I've mentioned are potential price targets where the stock can reverse. And I don't have time in this video to go through the intraday charts, because when trading, I'll use the daily to get the bigger picture, and then I'll jump into the 60-minute charts to hone down and try to time an entry on this one. You can see some mild divergence, positive, or aka bullish divergence forming on EAPH, and you can also see what appears to be maybe a descending price channel, maybe falling wedge. So there's a possible long entry there. I'm just using this one as an example. Unfortunately, guys, there's too many stocks, as I said earlier, 37 on my watch list. But so there's resistance zone. If that one popped above that level, then it can probably go on to challenge the previous highs, and that would be bullish. So again, that's how I trade. I look at the daily and weekly charts to get the bigger picture, where the stock is likely going, and just measuring this one using the rough measuring tool of the widest part of the wedge. You add that to where the wedge breaks down, and that shows your price target. So this one has about met the price target. Comes in with that support level I have here at about the 0.236 level. And although I have to say I favor a move down to here, this would be my ideal buy point. And I picked that level because I see quite a few reactions there. I see 2 reactions there. Although there's a wick up higher, there was another candle that ended around there, and I have a reaction there and reactions here, and I believe to the left of the chart on this one. So that line is at 0.184. And maybe you want to scale in all the way down, add a little here. If it breaks, leave room to add there, and then I would be concerned if it goes much below there, you might want to stop out. SGBY Signal Bay, same story. Down here when it was bullish, there was nice volume coming into the stock, and it did go on push up higher. Here's another story of just tremendous gains in short order, almost 14,000%. Heck of a return. So again, it's gotten ahead of itself, but still a lot of volume in these stocks, and you can see it wasn't just a complete run up and an equal move down. It is, as I mentioned in the other video, more so, it certainly had a pullback, but it's more so consolidating or working off those overbought conditions in more of a sideways consolidation period, at least as of this point here more recently. So that's somewhat healthy. And if I had to take my best guess on this one, I would say there's going to be another thrust down, a little more downside in the sector, and I like this level as a reversal point. And that is, let me give that to you. That is the point 0.0127. If that's the actual support, which it is where I have that line, I would step in and buy a little bit above that, start scaling in, and maybe even allow room to add all the way down here. It's a pretty big drop percentage-wise, but again, you have to listen to the other video if you haven't done so. And I talk about position sizing, diversifying, all that good stuff that'll keep you from getting wiped out if you're on the wrong side of these trades. There's ENRT, Enertopia Company Corp. Let's see, that looks like at this point we had a bearish rising wedge, breakdown, push back up, fell short of the highs, and then melted down. There was this trend line as well, and that's really, you can see after that broke, there was that waterfall sell-off. This one's been a little tricky since then. See, as I mentioned, not all of these stocks are in a downtrend. This one seemed to has already finished its correction, or at least at that point it certainly did. And from there, the stock went on to make a new high by a fair margin and climbed 553%. hard to really give you levels on this chart, but I can tell you right now, if I had to pick one, if this one comes back in, somewhere here around the 0.0463 level, maybe a little bit above that, you want to start stepping, or we'll call it about 5 cents a share. That's where I'd start scaling into that one with a stop somewhat below that zero point 0.4, let's say 0.44, somewhere around there. I'd like to see that level hold. And so it would look something like this, my ideal scenario. And remember, you might not always get that pullback you're looking for. So it depends where you're at. If you had, been in the site, going back in 2016 when I started harping on a lot of these names, I don't know if I can't recall if this one was in there. You were scaling in before. You might have a long-term core position with a real low cost basis, and hopefully took some profits like I did before the elections. As I said, I saw very little upside left at that point. Here's the elections. The risk reward was clearly skewed to the downside, and we corrected. So you could have bought back in on any of these levels. But at this point in time, if you're new to the site or you're new to the cannabis stocks, that's my next buy point right there. Other than that, this one could continue higher. It's had, like I said, a lot of relative strength lately. That means it's doing it's performing a lot better than the other cannabis, the majority of the other cannabis stocks. And this may be a bull flag pattern. So if that's the case, to get a target, you take the distance of the flagpole. That's the sharp move leading up, and then you add that to where it breaks out. So that's one possibility, and that could be your buy trigger, a breakout of that bull flag, especially if it's impulsive on high volume. PHOT, Grow Life. Not much to say about this. I have a level there at 2 cents a share. Here's a downtrend line. It looks like it's limping along, back testing. So it's hard to buy back tests because they can keep back testing. This trend line can continue to extend. The stock could go lower. But I can tell you this, that it has some decent horizontal support here around 0.0082, give or take, and then certainly a level there at 2 cents a share, a very well-defined resistance level, so a breakout above that level. In fact, if I don't already, I might already have an alert. I'll set one there. All right, next one up, TBQBF. Emerald Health Therapeutics, very thinly traded. You can tell by these funky looking candles and low volume. And then we had an uptrend line. That uptrend line was broken. This one's consolidating sideways since. You have a support level here at 0.9387. Next support, if that breaks, 0.7618. And then finally, this would be my last area where I would consider scaling in on this one. And that's 0.5, what was that? 5.383 cents. And again, those are the actual support levels. So you want to buy a little bit above there, stop out somewhat below. There's also a downtrend line to watch. So this could be a potential buy if this current level holds, or even if it moves back down here at some point in the future. You want to look for a breakout above this downtrend line, as that might trigger a rally if we break out there. Whoops, wrong tool. There we go, somewhere above there. All right, next up, Chuma Holdings, CHUM. Not a lot to share on this chart other than this level right here, and that is 0.0815. Looks like a few reactions there, break of that level. You also watch this downtrend line for a breakout, and then this would be a target up here about the 15-cent share level. Support's hard to define on that one, but we're sort of at the low end of the range. It's broken below there, very thinly traded. Not one of my favorites. I don't want to spend too much time on that one. And keep your position size very small if you do take that one. APHQF. Aphria Inc. And this one has an ascending price channel. Broke down, back test. Looks like it's been back testing that channel from above, but moving higher all the while. One thing I note on this one, or I noted, is that we had this previous reaction high. That was a brief intraday shoot. Sometimes I'll take the next candle and we have a long wick like that on a candle, and I'll draw this way with a trend line, or you could take a trend line from there if you want. Either way, point being, I see potential negative divergence. If you use this level right here where these candlesticks stopped, we have made a new high. Let me drag that trend line down. I'll take this one down there. So then what I'm getting at here is we do have then negative divergence in place if that's the case, and that may be. If not, even if we pop up a little more, continue to backtest or even regain that trend line and we take out that previous high, that will most likely be with divergence in place. That's why I gave a little space here between the lines and put in a divergent high. So you can look at a glass half empty or half full. Sometimes these divergences do get burned through, so you're looking at one of the few stocks that, despite the majority of the stocks going down, this one's making new highs. So maybe there's something there. There's obviously a lot of buyers in the stock. They're pushing it up. So maybe this one goes on to continue higher. This is a tough one for me to call. If anything else, like I said, you can always scale in. You start small. Let's say you're going to commit, $500 to this thing. Put $100 in now, and you continue over the next 6 months, or I'm sorry, the next 4 months, a month from now, and then 3 months after that, you add another $100, and you're scaling in dollar cost averaging. So if it goes up higher, you're buying fewer shares at a high price. If it comes back down, and I can tell you right now, no ifs, ands, or buts, I think this is an objective level. If it gets there, the 312.57, so about 313 level, that's support. Each of these are support lines, but this one looks pretty good so far. Like I said, the negative divergence gives me a little concern, but that can, of course, be taken out. It looks like the PPO is just flattening out here, and it can bounce and turn back up. IIPR, Innovated Industrial Properties, I believe they're out in California, and they manage properties, facilities to grow marijuana. It doesn't have a lot of trading history. It's only been around for a couple months, so it's really hard for me to render an opinion on the chart. Here's a reaction low here. This is when it just started trading, and it briefly overshot. So right now, that $16 level, I wouldn't do much now, but you can see at this point we already have 3 reactions, which is good enough to help validate at least an early validation of a trend line. 3 reactions, if we get a reaction here. Just because we're trading here, that doesn't mean we've had a reaction. Reaction means the stock needs to either close there today or bounce, and that'll be a reaction. That'll help define $16 as a support level. You want to take an early shot now, certainly buy here at the $16 level with a stop somewhat below, maybe on a closing basis. And targets, kind of hard to say at this point, but we could certainly start to draw a potential downtrend line right here. And let's move on to the next one. Vape, VAPE. Vape Holdings, these are the levels. This was an uptrend line. It was pretty well defined. It was broken, so the stock, like so many others, is in a downtrend right now. Coming up on the first support level here, about 0.007, and that's 0.0046, that level there. And hard to say, really hard to say which one it reverses at, so you want to scale in. I don't see any positive divergence there. It all depends on the sector. GRNH, I've liked this one for a while. Still have a core holding in this one, but it's flirting with this uptrend line. Now it had a healthy correction right here with the red. You can see the divergent high. It had a negative divergence, and it did correct a big correction. I mean, again, using a log scaling, that drop off the divergent high was a give back of about 70%. Of course, put things in perspective, this stock has come up from the lows there back in 2016. It rallied over 800%. So where are we now? It's pulled back to support. This is uptrend line support. There was divergence here, but it may have already played out for enough of a correction to work off those overbought conditions. And it's certainly an objective level to go long here. Any of these levels below can serve as stops because they are horizontal support levels. And the golden buy zone, if things get ugly in the cannabis sector, would be down here around the 0.05 cent level, half a cent level. Don't expect it to get there, but if it did, these would be good buy points. And if it does go much below that, then you probably want to stop out. There's something else going on with the company or the sector. All right, EDXC, divergent high. You can see the negative divergence, divergent high correction. I could probably draw a trend line going back all the way back here, and it's pretty well defined. So there it is. One series of two, a couple almost reactions, a reaction there. We can maybe even tighten this thing up like that. Yep, that looks a little bit better. There's a little overshoot, candle close. So this is our trend line to watch. So far, again, we've worked off a lot of the overbought conditions, and this one you can buy here at both trend line and horizontal support. If that trend line breaks, any or all of these are targets. I would not want to see this one go below this level. This is the, and I know that's a ways down there. That's 2.5 cents, but that's very solid support. I don't expect it to get that low. My guess is if the fundamentals are good on this one, it'll hold support somewhere around this level if it drops below that trend line, and that might be a good place to add some more if you have room to add. Otherwise, you buy it here and it make it go up and make a new high. ATTBF, let's see, here we go. Had a well-defined downtrend line, broke out, ripped. There was a bull flag. I must have highlighted that at the time because here's my measurement for the flagpole. There's a breakout on the bull flag. You add the flagpole to the bottom of the flag, and so it easily met the measured target. I've seen people add it to the top as well, but to be safe, you want to add to the bottom of the flag. So that one exceeded the target, and what it did, it's consolidated around. So I need to tighten this up or add a different line here. This really now is a key support level. See all these reactions along here? So let's mark that level for you and tell you that's 10 cents. So any pullback to near the 10, call it 11 cent area if you don't want to try to pick the bottom, because usually the buyers may step in early. That would be an objective level to go long, with maybe a stop below this line here that's about almost 9 cents, a little below 9 cents a share. And you'd be looking for this one to take out, especially this previous reaction high right here, this high. That would be bullish. I should jump back to that just to mention, like so many others, I didn't show you it here, there was divergence here. That high was a divergent high, so there may be more to come. And you can also see what appears to be a buying climax at that high. So again, these may need to work off these overbought conditions in either time and or price. I'm thinking more so in time, but I do see quite a good chance a little bit more downside as well in price. Here's another one. It's kind of working its way sideways in a sideways trading range. Actually, I covered this in the other video, didn't I? I sure did. So there's your sideways trading range. I talked about the overhead resistance. Big level, well defined if it pops above there, and bearish if it breaks there. CVSI, may have covered this one. Let's see. No, I don't think I did. In fact, Dazi had requested I do CVIS in the trading room, and I'm now assuming this is probably what Dazi meant is CVSI. He had typed out here, CVIS. Okay, so CVSI, this one I've covered for a while. This one I like. I've traded this one, well-defined downtrend. Trades well to the technicals. There's your little bull flag. See the bull flag continuation pattern. There's the flagpole. See how well it played out. Almost perfectly hit that target, which was also resistance. That target was placed there not randomly. It wasn't placed there for the flag. That just happened to coincide roughly with the target. And since then, it pulled back. So it had a pretty healthy pullback to support. And as I said, I have a lot of what I call micro levels. These are all significant levels here. And you can see, and a lot of these lines were added, I believe, in advance of this pullback. I can't tell you when I added each one, but you can see how well it's behaved off these stops there. It's resistance. Once resistance is taken out, boom, you see an impulsive green stick. That's a breakout. Hits this resistance level here, consolidates sideways for a while, and then boom, breaks out. Overshot this one this level a little bit, but came back in a sense that level has contained it. And it's pulled back to this 4 cent, 0.04, 4 cent support level. And that's certainly an objective area to go long. But it would be an even better buy here if it comes down to this 34 cent level. Very well defined. If I go back to the left on the chart, I see a lot of reactions. Going all the way back here, reactions from above, reactions from below. So that would be a golden buy zone. So maybe a fractional lot here if you're not in the stock, and then you want to plan to take a full position. When I say a full position, not what you would take in SPY. Again, I talk about beta adjusting. If you put 10, 20,000 in the SPY when you trade it, you want to put a few $100s in this stock because you're not looking to make, 4, 5, 8, maybe 10%. You're looking on this stock. Let's just say it comes back up to this previous reaction high. That's 186% return. ACBFF, still one of my favorites. This one, I mentioned posted on the front page selling. It was just shy of the long-term final target. I unloaded some shares, but I still have a core holding position, and I like this one. I like the fundamental story, and it's certainly doing. It still hasn't taken those highs out yet, but it's correcting sideways more in time than in price. And as long as it stays above the 150 level, 151 give or take, I think it looks good. If it breaks 150, there's not a lot of support. There's a little support zone down here around 125 or so, but that one may fall all the way back to the $1 area. I don't think that's going to happen. I think it'll work its way out and continue on higher eventually. But for right now, you just have to be patient with it. I don't see it going anywhere anytime soon until it breaks above this level or down below the 150 level. CNAB, United Cannabis, series of well-defined downtrend lines, breaks and rips. And again, these don't look like much, but if I try to quantify it, if I can grab here, 300 and something percent. If I can I have to grab right below the trend line or I'm going to move it 1800% on that run. And now what I'm seeing is it's walking up this uptrend line. Before these were downtrend lines, which were resistance, and we've got a breakout. Right now I'm more concerned, especially with the big run up, the huge volume climax here, buying surge, is if this trend line breaks, which I'm leaning towards, we get a move down here. Let me give you a mark on this. That's about the 75-cent level. And that would be an objective, certainly an objective long area. See quite a few reactions there. If you look to the left, see reactions here, little gap right there, reaction, quite a few reactions back here. So that's your ideal buy zone, but it may continue to hold support here. Support is support until and unless broken. And right now there's a stock dancing on support. Resistance would be to take out the previous highs, and that would be also a buy point. MCOA, Marijuana Company of America. There's an uptrend line it broke through. Again, another one sort of consolidating sideways, more so in time. It had an initial pullback right after the elections, but it kind of snapped back up. And it's held up, relatively speaking. Again, just look at where these things have come from. So longer term, they still look okay. Arrow, this was one of the few that I actually shorted, and I posted that on the site that, I'm very, very leery to short low price stocks. I do it very judiciously. I have to see a lot on the chart, and this one had a clearly bearish pattern, even leading up to the elections, whereas a lot of the other ones, that lined up with it as well, but my point was it had negative divergences building all the way back from April of last year, and a very well-defined uptrend line which broke. And when that broke, you can see it broke down. There's a little bit of a flagging action here, bear flag. Then we broke out down from the bear flag pattern and continued lower. So you had your, if you will, sort of your flag pull right here, down into the flag, and then the flag broke down. And this one is, I like this one now. This is your buy zone here. I see nice support around 216. You can see how well defined that level is right here. There were reactions back here. So the stock's at 238 right now. Let me turn that up for you, that color. So there it is. So you want to step in. I wouldn't wait till it got to 216. I'd start buying it, anywhere from about where it is, maybe the 230 level, all the way down to 215 or so, with a stop somewhat below. If it breaks that level, I give it to at least maybe $2 or so, maybe on a daily close. I don't see a divergent low yet, but so it might have a little more downside. But again, if it gets down to that level, I think that's a good objective level. And we'll have to hone in on the 60-minute charts at the time. Like I said, I don't have enough time in this video to do that. In fact, I'm already at my 30-minute mark where I wanted to wrap this up. TWMJF, Canopy Growth Corp. And we just broke down from this downtrend line, so this one looks like it may come all the way down here. I don't see support down until about 553. It's at 810 now, so you can do the math on that one. It's a pretty big drop if it gets there, but that would certainly be an objective entry. It's about a 32% drop, and the next level down is about 46%, next support level. MJN.V, so that trades on the Canadian Venture Exchange. When you see the .V, working its way up, divergent high. I wouldn't chase it here because of the negative divergence, and there's probably, if I zoomed in on the 60-minute chart, we can look at this uptrend line here. So sort of a little rising wedge pattern. My best guess on this one is it wants to come back and at least visit this uptrend line down here and maybe have a little reaction there. There's also some support to watch right here, horizontal support, and if it breaks a trend line, it want to probably run for that. And your next support is down here, about the 130 level. So it wouldn't surprise me to see that one come back into about 130. I'm not crazy to buy it really till it gets down to there. I don't have a position in that one. EMC.V, was hardly any trading in this stock, and then all of a sudden it just popped up one day. It's not a hard level because there's not a lot of reactions yet, but around 256, just watch that for support. I wouldn't touch that one, to be honest with you. CBIS, negative divergence. You can see it down here at trendline support now. So you can step in and buy it there. Did I already cover that one in the other video? No, I don't think I did. Either way, nice support zone here. If it does hold, there's decent support. However, if that support breaks, then we're going to head down to any or all these additional levels down here. And on this one, I think a good buy would be this level here. I have to turn that on for you. Edit, show, that's 5 cents a share, roughly a little below that. All right, ERBB, look at this funky little triangle pattern going. And then support just below. So you want to see this one keep above that 0.0012 level, and if it breaks above this trend line here, this downtrend line, then these are potential targets, and I should certainly add a target right here at that previous reaction high, as well as the top of that, the top of that gap, and that would be a near-term price target, 0.003, and then next target would be right around these previous reaction highs here. Again, that's a low price little stock. Be careful with it. MCIG, rising wedge, breakdown, impulsive selling. It's come back up to resistance. It's backfilled. If you look, there's a gap right there. I should actually move that. Well, I won't move that line because that is a valid support line. There's also the top of the gap. Made a backfill the gap, and it's turned down from there. Well, that was your buy point right here. You know, had I done this video a week or two ago, I would have said, you know, here's your first support level. This is what I'm talking about, these intraday overshoots, and that's why I'd like to use a daily stop. See how it overshot intraday? It would have cleared a lot of stops, but it closed right back above that level. And this line, I've had that line there since, at least I haven't updated it since January 20th. Next support, if that gives way, is about 0.1482. But if it can power on up, that's the next target. It's the previous reaction high, and then anything above there is clear sailing if it takes out and breaks the previous reaction high. Almost done here. OGI.V, another Canadian Venture Exchange. Organigram Holdings just gave up support at 235. That doesn't look good. That was a descending triangle pattern. This line, this downtrend line, as well as this horizontal line there, and we just broke support. So that's not looking good unless that one regains 235. I'd stay clear. OGRMF, that's the same company. That's just the bulletin board or pink sheet. That's the U.S. shares that trade for those of you that don't trade Canadian stocks. You can see the uptrend line here. Breakdown of the uptrend line. We went in a sideways trading range for a while. See how these sideways trading ranges don't always resolve to the upside. This one was correcting in time in a tight sideways range, but it broke that support and then it moved down sharply. There's a minor downtrend line here. It's back testing as well as a horizontal level. There's that's minor support where we're at right now. The key support, if things get really ugly, is down here about 1.3 cents a share, $1.03. All right, that is it. I've covered all 37 in my watch list. Again, this was part 2 of a two-part video on the cannabis stocks. If you guys have any questions or comments, drop me a line in the trading room. This has been Randy Finney with Right Side of the Chart.